Hi, everybody. This is Kirk Kinder of Picket Fence Financial, and just doing a little quick webinar here on a topic that I get questioned quite frequently from clients. How long should you keep your financial paperwork? So many clients end up having just tons and tons of paperwork. They basically keep everything they've got, so they don't know what they can get rid of and what they need to keep. So we're just going to talk a little bit real quickly about what you should do with your financial paperwork. Now, there are certain things that you should do no matter what. These are kind of fail-safe measures. And one thing, if you want to have lots of paperwork, if you want to have that paper trail, you can always scan the documents and then put them on your computer and make sure you back up your computer. So this way, once you get everything scanned in there, it's there. And then you can start downloading everything electronically. Most banks and brokerages would love to have you do that. And just to note, the IRS does accept all scanned documents. Now, if you're ever in doubt about a document, you need to keep it for 7 years. This is the usual time that the IRS can go back and look at your tax returns. The only way they can go back further than 7 years is if they find out that you're being fraudulent with your tax returns. In that case, they can go back as far as they want. But the burden of proof falls on the IRS to show that you're fraudulent after that 7 year period and not you. So you won't have to necessarily defend yourself to the IRS with their questions. They'd have to prove it at that point. The other big thing, make sure you shred any document you're discarding. Don't just put it in trash. Don't put it in the recycle bin unless it's shredded, especially if it has a social security number on it. You need to shred it first. So for tax returns, how long do you need to keep a tax return? Now, ideally, you probably want to keep your tax returns forever. You don't have to, but in a way, it's kind of neat just to go back through time. I was going through mine a few months ago, and it was just amazing to see the money I was making in the early 90s compared to today. So you can kind of get a real good glimpse of your life just by looking at your tax return. But technically, as long as you're not filing intentionally fraudulent returns, the IRS is only going to go back as far as 7 years. And more likely than that, 3 years would probably be all they really look at. But again, as I mentioned before, if they go back past 7 years, the IRS all of a sudden has a burden of proof at that point. After 7 years, you can shred all your supporting documents like receipts, trade confirmations, everything like that that goes with the tax return. So, for tax returns, if you really want to get rid of them, at least keep them for 7 years. So your estate planning documents, these are also very important. You want to make sure you have the most recent version of your wills, trusts, medical directives, anything like that dealing with estate planning documents. Now, some people will tell you to keep all versions of your estate planning documents, but I don't necessarily agree with that because I think what could happen is it can confuse your heirs. What if they find a will from 1992 and they didn't find your current one from 2008? What happens? So what you want to make sure you do is keep your most recent version. Another critical thing when you're doing estate planning documents, make sure that one document replaces the old one. Sometimes if you have a trust or a will, you just do an addendum or you amend the will or trust. So basically you keep the current will or trust in place and you're just adding some minor changes. In that case, you need to have the original will or trust along with the addendums. So if you do get some new estate planning documents, make sure you understand if you're just amending or if you're replacing. If you're replacing, then you can shred your old documents. If you're amending, you're going to have to keep them. For all your autos, keep all paperwork as long as you own the car, your registration, any repair, receipts, warranties, user manuals. Just keep it as long as you own the car. This will also be great if you keep this stuff when you go to sell the automobile. Keep the title transfer paperwork after selling or donating the car. You want to keep the transfers as long as you can. For bank accounts, again, keep your bank account statements for 7 years. This coincides with your tax returns. If you get canceled checks, you can shred them after a year unless one of the checks pertains to a tax issue. Then you need to keep it again for 7 years. ATM receipts can be discarded immediately after verifying against your monthly bank statement. So just make sure that the ATM matches up with what your bank statement says and then shred it. Bills. You can shred these immediately after paying unless you need it for proof of a tax issue. Pretty simple there. Credit accounts, here again, you can shred these after a year unless you need it to prove a tax write-off. Then you got to keep it for that 7-year period. If you had a collection action, so if you were behind on your payments for credit accounts, you do need to keep the documents showing that you paid off the debt. All right, so in some instances, maybe you might owe $5,000 to a credit card, and you negotiate with them for $2,500, and that takes care of your debt. Make sure you get that in writing and keep that piece of writing, because a lot of times the credit card companies or the collection agencies will sell these to other collection agencies, hoping that, hey, maybe they can sell this extra $2,500 for a nominal amount, maybe a very small amount like $100 to $200. And then these secondary collection agencies hope that they can get you to give them the $2,500. So they put up $100, $200. Maybe they make a big payday, maybe they don't. But all they need is a small amount to pay so that they can make some money. So if you do get a new collection agency contacting you saying, hey, you still owe $2,500 on your initial $5,000 debt, you need to have that letter from the initial collection company or credit card company showing that, hey, I satisfied this account when I paid the $2,500. Pay information, you can shred pay stubs as quickly as you get them. You may want to keep the most recent one. So every time you get a new pay stub, you keep it. And then you can match it up with your W-2 at the end of the year. So you make sure that everything on that matches up what's on your W-2. You want to keep your W-2 with your tax documents for 7 years. Buying a home. So you want to keep any information regarding buying and selling your home indefinitely. So when you buy it or sell it, just keep all that paperwork. I know it's a pain. You can scan it, but keep it. For tax purposes, you want to keep any documentation regarding the costs associated with buying or selling the property, making any big repairs or improvements to the property, and then any real estate commissions. The repair and improvements and real estate commissions, those numbers affect your tax basis, which could play a role when you go to sell the real estate. For your insurances, when you get an initial policy, whether it's disability, life insurance, auto, home, umbrella, you want to keep the initial policy document indefinitely or until you get a new policy. But as far as the statements that you get every so often, you only need to keep the most recent statements. The others can be shredded. If you file a claim, keep the information for at least a year. If it's a big claim, you might want to keep it for 7 years, as the IRS may question a large deposit into one of your banking accounts. You want to be able to show that, hey, this $100,000 isn't, I'm not selling drugs. I'm not selling a monster number of Beanie Babies on eBay. This was for a massive home repair or a car reimbursement. For your investment accounts, you really want to break this up by two things. You want to look at taxable accounts and you want to look at retirement accounts. So for taxable accounts, you really only need to keep the December statement for each year. You don't need to keep all 12 months. But you do need to keep any trade confirmations for tax purposes for as long as you hold the investment plus 7 years. So if you buy Disney stock this year and you hold it for 10 years, well, you want to have that trade confirmation for the buy for 10 years plus 7, because the IRS can come back in that 7 years. So you have to hold that for 17 years. For retirement accounts, you don't need to worry about the trade confirmations. You're only taxed when money comes out of the IRAs or 401ks. What you do need to really track with investment accounts is if you make any non-deductible contributions to IRAs. If you do that, like if you make a contribution to an IRA and you can't deduct it all, part of that is going to be a non-deductible contribution. You have to file Form 8606 on your tax return. You need to track that because eventually when you do pull money out of your IRAs or 401k, you're going to have to be able to show the government that not all of that is taxable. And you'll do that with your 8606. So that's just a quick rundown. This is the information you need to know when you're looking at what documents you need to keep and what documents you can get rid of. If you have any questions, please don't hesitate to contact me. You can go to picketfencefinancial.com. That's my main site. You can reach me through there through email or phone. And I also have a blog at savingyouFromWallStreet.com. If you'd like to get more information from me regarding topics like this, you can always sign up for my newsletter at picketfencefinancial.com. We'll send this out every month, and you can kind of keep up with some of the latest trends in the financial world and just helpful hints that you may not find elsewhere. So again, thanks for listening. And if you have any questions, please let me know.